industry in Saudi Arabia. And we've got an office here in Riyadh, and part of my team is also with us here this morning, as well as outposts in Dammam and Jeddah. Over the last 7 years, Saudi Arabia has gone through a drastic transformation, and those of you who are present in the country can see the vast developments. The main focus is to diversify the economy, create a thriving economy and an ambitious nation. And one of the main outcomes of this transformation are the mega projects. We do see a lot of German companies participating in them. Therefore, finance covering is very important. And one of the main pillars of the transformation is that we are currently seeing a lot of the mega projects who are basically paying into the new developments, which is the announcement of the Expo 2030 and the FIFA World Cup. But we also witness a bit of a slowdown, which is partly, we see it here with Red Sea Global or DERIA, that some of the mega projects have partially finished already. Therefore, there's a bit of a slowdown when you look at the number of the overall spending compared to 23 and 24. German companies are participating in NEOM, for example. One of the largest hydrogen green hydrogen productions are being built, where the electrolyzer comes from Germany. Roschen is another example where we have German architects. But with King Salman Park in Qiddiya, we also see that these projects are very relevant for Expo 2030. We have German landscapers and even nurseries coming from Germany for the planting of the trees and developments. So you see German large companies as well as SME companies successfully doing business in Saudi Arabia. Overall, also the diversifying of the industry is relevant for actually all sectors, which is very unique because you have sectors like tourism, which hardly existed, only in reference to the religious tourism beforehand, where now companies are participating in mega events, organizing it, supplying technology. But with the mining sector developing as a new, very relevant sector also for Germany, we have a lot of German technology providers. Automotive is also relatively new to the region. Saudi Arabia is setting up an electromobility automotive hub. So in the last years, us as a delegation, we have supported a number of OEMs in entering the market. But at the same time, we also see that there is still room for further companies developing the automotive cluster. Last but not least, the healthcare sector is undergoing one of the world's largest transformation. And here we have a delegation also coming next week where we see there's a vast interest in e-health, applications of artificial intelligence within the healthcare sector. So you see there's a vast opportunity for German technology to be placed in the market. This is also reflected in the numbers, the export numbers. We see a growth since the end of COVID. German companies participating in the dynamic project market, and therefore it is very important also to give an insight in the export credit guarantees. And on that note, I would like to pass on to Eva Steinhaus. She's the regional representative of the German Export Credit Agency, and I'll give the floor to you, Eva. Thank you very much.
Very much, Dalia. Good morning to everyone. Give me 1 second as I switch here. Oh, it's not working. Okay. Here we go. So then I will give you an introduction. First of all, we have a number of likely also Saudi companies present to give you an introduction to the export credit guarantees of the German government, how they function and how they are relevant to your business, and give you some requirements for applying for these. And then we'll pass on and dive deeper sometime later. First of all, the German Export Credit Agency, that is typically known to be Hermes, behind the scenes, it's a bit more complex in the sense that we have an interministerial committee making the key decisions on export credit guarantees policy-wise and also on larger transactions, the ones that are above 15 million euros.
Sorry, I cannot see the slides yet. Have you shared?
Okay,
Are you sharing?
that is okay. Thank you. Is it sharing?
Yeah,
Hang on.
no.
But now it's showing something else here. Hold on a second. Why is this not working?
Yeah.
Okay, are we
Not showing.
on the right track now? Okay, good. Thank you for letting me know. So back to this slide. So the German Export Credit Agency, I just spoke about the Interministerial Committee as being the key decision-making body when it comes to policy decisions, but also transactions that are larger than 15 million euros. 4 ministries are represented there, and in the lead is the Federal Ministry of Economic Affairs. Sorry, I say here climate action. It is now energy, and has recently changed with the government change. Commissioned with implementing the export credit guarantees is Hermes Aktiengesellschaft, based in Hamburg, and they will handle the applications, handle the portfolio, present cases to the interministerial committee, and have been doing so for decades. Since 2019, we have 3 competence centers and now recently 4 based within the AHK. So similar to Gesalo, we have offices all around the world. And 4 of these have actually competence centers for export finance. And we represent, so to speak, the German Export Credit Agency in the relevant countries. For me, that is the MENA region in Pakistan. So that includes Saudi Arabia. And we advise importers, international stakeholders, exporter representatives here in the region, as well as banks on export credit guarantees. Export credit guarantees, they are actually an instrument of the government to promote foreign trade. And they do so, or the government does so, by providing political and commercial risk cover to either the German exporter or banks that are financing this transaction, the export transaction. And it is done by a range of cover instruments. I won't go through all of them today. That would extend the scope of this presentation. But there is a certain product range for exports and a certain product range for banks, all of which in the end do benefit the importer, even if you're not the applicant for the guarantees, but you have basically access, in some cases, in some countries, even access to finance where there was no access before. There is a facilitation of longer payment terms and reduced financing costs as the bank or the exporter actually faces lower risks on their books due to the 95% of cover from our AAA rated government. Of course, through that also you get access and also help. Again, the AHK and our Gesalo plays a significant role here, also in buying capital goods from Germany and getting an overview of the market there. Why does the government do that? As several other industrialized nations do, and I know Saudi Arabia has Saudi Exim as well. It's primarily to facilitate export finance and open up markets for exporters that have not been into these markets and may have a perception or a real case that these countries may be too risky for them. On top of it, and on a larger scale, it enhances and sustains the trade relations between the 2 countries. It's, of course, safeguards and creates employment opportunities in both countries, Germany and Saudi Arabia, by providing capital goods and supporting factories and so forth to be built up in the country. Also, they provide a level playing field for German exporters, as there are other export credit agencies as well on the market, so that they can actually compete based on the quality of their products and the pricing, rather than having to worry about the financing terms. Lastly, it's filling the gap where private insurance is either not available or prohibitively expensive. Just to give you an overview, in the last year, ending December 2024, we had a portfolio book, or when I say we, the Hermes, the Export Credit Agency, had a portfolio book of 111 billion euros of cover outstanding. We have a budget of 140 billion given by the government. newly supported for the year 2024 were 17 billion euros, 65% of which from emerging markets in altogether 143 countries. And transport infrastructure is our primary sector there, or was it in the last year? Renewables also plays a significant role. As it comes to Saudi Arabia, we have done business there for quite a few years, but continuously expand our partnership in various sectors. We have a portfolio size as end of 2024 of approximately 2.2 billion euros, simply to Saudi Arabia. And that covers infrastructure to 49%, chemical industry 22%, energy and agriculture. But our cover is not limited to these industries. Dalia had a slide for industries. All of these would be applicable for this export credit guarantee scheme. We have also a strong pipeline as evidenced through LOI requests from our exporters or banks. Hopefully a lot of this will come through and strengthen even our relationship with Saudi investors. And hopefully helping us in that also is a new program from Hermes released early this year, offering such things as shopping lines and providing also the opportunity to ask for cover from EPC contractors that are not German. From the importer's perspective, why would you really benefit? I alluded to that a little bit earlier. But let me give you a bit more in-depth information here. First of all, it enhances your flexibility and liquidity when you embark on new business opportunities, and even if these are large projects, there is a high-risk capacity that we have. Also, then you can benefit from reduced financing costs as you are backed, or your project is backed up by a AAA rated government. The tenors are quite attractive, and compared to local banks tenors, in some cases it is actually much longer that we can offer, so that you have several years of repayment. And when it comes to climate friendly transactions, there is even more flexibility in terms of the terms and sourcing. Lastly, we offer structuring expertise and very transparent due diligence. Let me come with that to the products and conditions. As I said, there's a whole suite of products that exporters and financing banks can apply for at various stages of the transaction, from contract negotiations through to, let's say, manufacturing, shipment installation until the final repayment. I'm just going to highlight a couple of them. This would be, for example, for a exporter who has issued a bid bond. If there is an unjustified calling of the bid bond, that can be insured through a contract bond cover. During production, for example, especially if the exporter provides a very tailor-made product to the importer, and something happens on the other side, be it due to commercial reasons or political reasons, and it doesn't come to the actual shipment to the destinated country, there's a manufacturing risk cover that the exporter can apply for. Now, the focus of this presentation, for some reason it keeps jumping back, is actually after delivery. So when the shipment has arrived to you, it's time to make a repayment. And there we have most relevant supplier credit cover and buyer credit cover applied for the exporter and the bank, respectively. In more detail, that means a German exporter wants to export, gets in touch with you as a Saudi importer, and as you conclude your transaction, you are typically not inclined, or especially the larger transaction, to pay all upfront or in lump sum, but rather benefit from extended payment terms, for which the exporter, of course, would then face enhanced political and commercial risks and can insure themselves via export credit guarantee covers. If the transaction is particularly larger and attracts the appetite of banks to do a financing, to provide a loan to you as an importer, then this bank can also enter this picture, take over the financing, and the German exporter pretty much gets the money right fairly in the start after delivery. What does it take to apply for or to be eligible for a export credit guarantee? First of all, we look at the contract and we involve or want you to involve a German contractor. You close the export contract with a German company based in Germany, with the exception, as I mentioned, alluded to earlier, EPC contractors where we just have changed our regulations. But that is something to really discuss on a bilateral basis. It needs to be a commercially feasible and bankable transaction for the government. That means in and the risk is full. So we do some level of due diligence as well as the bank that's financing the transaction. We look at a minimum of 51% contract value coming from Germany as goods or services. When you are engaged in a project that is considered to be climate friendly, then this minimum amount goes down to 30% and opens up the room for the remainder of the contract to come from third-party countries or from Saudi Arabia itself. We have to apply also here international standards regarding environmental, social, and human rights typically. That will all be disclosed and discussed once we get into deeper conversations about the cover. And then, as I said earlier, the cover is always being applied for at Euler Hermes by the German exporter and or the financing bank. So general terms, the cover that is being provided is 95% of the financed amount by the bank. For green projects that can go even higher. We have a comprehensive type of cover for both commercial and political risks. 85% of the order value can be financed. So what I said earlier, the covering is then actually 85% of the loan amount and 95% is being covered. So you can get 85% of your export contract or of your order value financed by the bank, plus the interest during the constructions, plus 100% of the premium that is payable to Euler Hermes. Depending on the loan amount in the industry is then the loan tenor in maximum terms, that is 15 years, in green projects even higher. And the repayment profile is rather flexible, typically in semi-annual installments. Premium is calculated according to OECD guidelines and is payable upfront as a coupon. Here's a quick overview. I don't want to go into detail right now. You will receive the presentation later on to read through, but for green projects, how you would actually benefit from greater flexibility and even more beneficial terms, as I alluded to earlier, and would then go to actually what does it cost? That's always an interesting question. So as I mentioned earlier, there is a risk premium to, or an ECA premium to be paid to the export credit agency. And again, that is based on the OECD arrangement. It's a calculation or a formula that encompasses several things, including the OECD country risk classification of Saudi Arabia, which is currently a 2 out of a total of 7. We have assumed here a sort of medium range and more common buyer risk, meaning you as the importer of CC3, and a commissioning or delivery time of 2 years plus either 5 years repayment period or 7 years repayment period. And then you would have an upfront premium to be paid at 3.45% or 4.48% respectively. That sounds to some people a lot at first, but you need to consider this as a coupon payment upfront. If you were to distribute that over the years of the transaction, it would actually come down to 0.97% per annum and 1.02% per annum, respectively, for the 5 years versus 7 years. All of this can actually be done tailor-made for your transaction. You get in contact with us or even go onto our website. We have a premium calculator there and have a sample calculation, so you get a sense of whereabout the premium would be amounting to. And with that, I've completed my presentation and need to get back to my webinar. Or is it gone? My computer has a little displaying today.
You can just.
So I cannot get back to this. There we go.
Yeah, great.
Thank you. So I pass it on then to Mr. Marius Kleck from a German exporter who's very experienced in Saudi Arabia, has a presence in Saudi Arabia, company Liebherr. And let's hear from him. Thank you very much.
Yeah, thank you very much, Eva Steinhaus, for the very good presentation. First of all, can you see my screen?
Yeah. Yes.
Yeah, perfect. All right, then, good morning, ladies and gentlemen, and salam alaikum. To my presentation, Benefits and Advantages of ECA Financing, a Corporate Perspective. And over a couple of minutes, I will present you the benefits for the view of an exporter like Liebherr, and also the benefits for you or potential customers as well. And I will conclude it with a small success story of the past couple of years. Let's get started. First of all, a few words about Liebherr Werk Ehingen GmbH, which was founded back in 1969 in south of Germany, and is obviously part of the Liebherr Group in total. We are the division for mobile and crawler cranes. In total, the Liebherr Group combines 13 different divisions. But talking about our division, at our location in South Germany, we employ more than 5,000 employees. Last year, we realized a revenue of more than 3 billion euros. And roughly, to get an idea, we are producing per year 2,000 cranes. Then I will show you our fundamentals. Our three main business activities are driven by the following three main products. First of all, the all-terrain cranes, which you can see in these pictures. It's a very popular crane in Middle East markets, especially in Saudi Arabia, for various projects and sites, mainly in the infrastructure business, but also for many other applications. Then we also have the rough terrain cranes, which you can see in the center picture, which are a little bit different compared to the all-terrain cranes. So you can also do pick and carry jobs, and these cranes are also very popular, for example, for projects in very large construction sites, for example, where you can lift and move then several goods by this crane. And last but not least, we also have big crawler cranes, which you can see in the last pictures. And these cranes are mainly used in, for example, the wind power industry to erect windmills and other heavy things. Let's have a closer look on Saudi Arabia. In Saudi Arabia, we have our own Liebherr subsidiary. It's called the Saudi Liebherr Company Limited. And as I said, it's an official Liebherr subsidiary. The main office is based in Jeddah, but we also have offices in Riyadh, Dammam, and for the past couple of months also in Tabuk now. In each location, we have administration facilities, but also, and more importantly, a workshop and technical team as well. Let's have a look back at 2024. We realized a revenue of roughly 125 million euros. For only our division, the mobile and crawler cranes, we employ roughly 30 employees there. But all over, Saudi Liebherr Company employs more than 250 employees in the whole kingdom. And to also give you an overview about our markets, currently more than 1,400 cranes of Liebherr are operated in the kingdom. Now let's have a closer look on the advantages of export credit guarantee from a supplier's perspective. First of all, it is possible to have a flexible handling of volumes starting from roughly 1 million euro onwards to big packages like 20, 30, 40 million euros. So it's possible for us and also for the customer then to handle larger investment packages. And as Ms. Eva Steinhaus already told as well, it is possible that multiple German exporters conclude one package, so other manufacturers as well. Then it's a big benefit for us that 95% of the contract is secured by Euler Hermes. Definitely, that's very important for us. And moreover, it's also possible to do a DDP handling with our local Liebherr subsidiary. So we can as Lipa Ehingen transport the cranes to the port, and then our local team will do the import, will do the customs clearance, and will transport the goods to the customer side, and which is definitely then also a positive or has a positive impact on the ICTIVA rating. Last but not least, it's also a positive effect on our liquidity, because we, if a bank is involved, we get the money upfront then from the bank. Now let's move on to the advantages of an export credit guarantee for the customer's perspective. Again, it's the flexibility to handle smaller but also larger packages. As I also said, the DDP handling is a very, very big advantage for our customers, because we will handle everything, and basically our customers can start then straight away on the construction side. It's also possible to actually move the cranes within, for example, the GCC countries, or actually basically worldwide. And last but not least, also here, you don't need a local finance in Saudi Arabia, because it's backed up by a German bank, basically, and you get, as Ms. Steinhaus said, very good terms and conditions. Now some highlights from our side from the last year and this year so far. We successfully secured multiple large packages above 25 million euros because of ECA financing. And this is also a big advantage and benefit for us to compete with our competitors in Europe, but also with the competitors from Far East. It's also possible, and it was for us as well, to acquire new customers because of ECA backed up finance, also in Riyadh and Jeddah. And yeah, in general, it's a very important addition to our, let's say, to our offered and tailored products, which we can actually then offer in the region. Yeah, so this was the presentation basically. To conclude it, for us, ECA backed up finance is a powerful, let's say, bridge between manufacturers, banks, and customers, and it's very important for us to have this tool, and for our customers as well. It's a very good, secure, and attractive option. And this will lead me to hand off to Ms. Ahrens to continue the presentation. Thank you very much.
Thank you very much, Marius. Yeah, really great to hear that you have so close link to Saudi Arabia, and this good, and you shared this good experience. So now I'm going to share my screen. Can you see it already?
Yeah.
Wonderful. Yeah, hello everyone, also from my side. My name is Ansgar, and together with my colleague Noemi, we are working here in risk analysis and underwriting in Hamburg for projects for the regions Asia Pacific and Middle East. And yeah, we would now like to give you some insights regarding cover criteria from a risk perspective, and also explain some details about the application process. Yeah, from our risk team here in Hamburg covers different aspects of analysis. So some economists in our office focus on the country risk, financial sector specialists on bank performance, for example, in case of involvement of bank guarantees or letter of credits, and environmental experts on ESG topics, and underwriters for the corporate risk analysis, covering different continents, also special sectors as transportation, defense, or even project finance. Within the Middle East team, Noemi and myself are focusing on business development, yeah, in the fast-growing Kingdom of Saudi Arabia, together with Eva Steinhaus as one of our four, or also including a mobile desk. So then we are 5 finance experts worldwide. Yeah, in our global in our global business landscape, German exporters face various risks when operating internationally, and these risks can be categorized into political risk on one side and commercial risk on the other side. And a political risk arises from changes in the political landscape of a country, which also can significantly impact business operations, for example, due to legal measures, war, revolutions, disturbance. This also involves changes in government policies or geopolitical events that also can disrupt the business operations. Another example for political risk is the conversion and transfer risk, the risk that arises when company faces difficulties in converting their local currency into a foreign currency like the euro, or by transferring funds due to government or central bank restrictions. On the other hand, the commercial risk is related to the financial stability and reliability of the business partners and customers of the German exporters. This includes that customers from the exporter are becoming insolvent or unable to meet their financial obligations. Another issue is also the protected default, which can be a delay in payments from the partners and the customers, and can obviously strain the exporters' cash flow as funds that or installments for the credit that were supposed to be transferred do not arrive in time, and so there can be internal problems of financial problems for the exporters, and that's a risk we wanted to cover. Let's have a look on the right side of the here we see what's important or what criteria are important to have in mind to get the cover. If I already mentioned some criteria, I just want to add a few points. What we are doing here in our Hamburg office during the underwriting process. When we look at the exporters, if they are eligible for the cover, we look at those who are protecting employment here in Germany, those who want to preserve and grow in the international sales markets, for example, like here in Saudi Arabia, and thereby small and medium-sized enterprises receive also a particular focus, recognizing their important role here in our German economy. So as Eva mentioned, at least 51% of the contract value must have German origin certificate, ensuring that the benefits of the coverage directly support German-produced goods and services. The German government has now introduced in the beginning of this year a new approach to the eligibility criteria. So the first German exporters already benefit from the so-called flex and cover by focusing on a German footprint, to say it like that an export company creates for Germany as a business location. So in general, there is more flexibility on the foreign content criteria now and in the future for even more exporters who are applying for this program. When it comes to justifiable risk, of course, as Eva mentioned too, we have a look on the country, and the coverage is provided when there is a reasonable prospect of avoiding losses. So it depends on the country risk, assessing the political and economic stability of the current target country, and in the case of Saudi Arabia, we have the country category 2. And moreover, we have a look on the international standards, talking about the OECD guidelines, like the requirement on down payment and maximum credit periods, as well as ethical practices, including ESG aspects, if they are if there is compliance. And of course, it depends on the buyer's solvency in the end. So Noemi on the will give you now further insights on the next slide.
Yeah. Welcome also from my side. Ansgar has already done the introduction. We work very closely together, especially on underwriting cases and business development in Saudi Arabia. So very happy to be here and to have you show so much interest. Maybe before I go into the application process, probably this comes too late, but if you have questions, please post them in the chat. We will address them shortly after my few minutes of presentation. So in this slide, this is a very simplified visualization, obviously, of the process. On the upper hand side, you will see the steps for the project parties that are involved. So the Saudi importer, the German exporter, and or the financing bank. And in the lower part of the presentation, you see the steps taken by us, the German ECA. Now, obviously, the whole process kicks off with your project negotiations. And as soon as you are in a somewhat advanced stadium of negotiations, either the financing bank and or the exporter, as Aoife has already said, will file an online application with us. This application will then land directly with Ansgar and myself or the other colleagues in our underwriting department, which is organized by regions, and kick off our project assessment. This assessment roughly consists of a basic KYC study, a financial risk analysis, and in some cases also a full ESG assessment. Important to keep in mind here that the timing can be very crucial when it comes to those applications, as the decision-making body, the interministerial committee, only comes together about once per month. So there are different decision levels. I think we haven't addressed it in this call, but depending on the project volume and certain criteria, we have some decisions we can take them directly from Hamburg. Some are taken by a small interministerial committee every week, and then the big projects, really with a project size of about 20-30 million, will be taken by the interministerial committee. And on top of just the 4-week meeting routine, there also comes a lead time of about 1-2 weeks for us as an underwriting department to hand in our application. So if you have a tight deadline, if you run on a short schedule, please let us know your timing. And it's always important to have especially all the documents complete for the application. But I will go into detail on that one in the next slide. Now, the interministerial committee will take the final decision for the big projects, and depending on your contract status, either trigger the preliminary cover decision if everything goes well. If you're still in negotiation, sorry, maybe I lost myself. If you're still in negotiation, you will get a preliminary cover and then have about 6 months time to finalize your negotiations. And once your contracts are signed, we will issue the final cover documents. If you already have everything in place, obviously, then you will also receive the final issuance cover. However, to get there, and the next slide, Ansgar, it's obviously interesting for you to understand what do we actually do, what do we actually look at. And for that, Aoife and Ansgar mentioned 2 pillars. One is the eligibility, which is more on the qualitative side, the famous 50% German content. And then the second one is the justifiability of the risk. And that depends, as Ansgar just explained, one, on the country risk, which in Saudi Arabia looks pretty good. It's macroeconomic factors. And then on the other hand, it's the buyer's solvency. And for us to understand the buyer's solvency, we will require you to hand in at least 3 or 4 years of financial statements, if possible, audited, and if available, also preliminary figures of the running year. We will do those numbers and look at key financial indicators. I think you can imagine sales, earnings development. working capital stocks, equity, debt, liquidity levels. And important to mention is there's not set indicators of what we can cover and what we cannot cover. Obviously, it depends on the overall picture. And we need to understand that if there's some particularities that we cannot read or understand from the numbers, Euler Hermes has a reputation of asking many questions. We will send you a small question catalog, which doesn't mean that we don't want to go ahead with the cover, but we just want to understand what is actually going on. Now, on the right-hand side, you see a block on the ESG analysis. In contrast to the financial risk analysis, that is not one that we always do, but it's triggered by certain criteria. If a project volume is above 50 million, for example, or if a project is done in a specific sector. If so, this will be done by our dedicated sustainability department, which will then reach out to you directly and ask you to fill in the ESG questionnaire. I will leave it at that, since this is not my field of expertise, but please feel free to shoot questions, and if we're not able to respond them now, we'll respond them after this webinar. I will leave it at that. Thank you very much for your attention, and very happy to take your questions.